I've added this. I don't know if y'all have seen it on Canvas, but any job offers I'm sent, I put them out there. So Accenture just sent me something called Client Financial Management. So you can look that one up. They have one of our alums there, so it gives us a little bit of connection there. I have four others. I mean, four altogether. One's a marketing community outreach, which probably doesn't apply to you. Digital sign, Bravo's digital sign, and then a business development representative, which is kind of startup venture capital type of job. But any that I get, I'll start putting them out there. I'll try to let y'all know. I don't get many actuarial job, just because actuaries don't know I'm here, so that one doesn't work as well. All right. So get a piece of paper, and I want y'all to try this question, outline it. You have it on the first exam, so it's a good chance for you to prep yourself. So the question is, according to financial theory, should corporations buy insurance? So you don't have to write it out, but just the outline. What would be in your answer on that? What's the outline for your exam question? I'll show you the rubric again after you finish, because this is the rubric. But I'm in this big thing on spacing. So we covered it last week, but to hit it again real quickly today just helps your mind capture the thought. All right, what do y'all think? What should be in your answer?
Definitely low frequency, high severity should be used.
All right, so you're answering another question we get asked is when should individuals I was going to ask that one by insurance. So Jalen, when is that?
Low frequency, high severity.
So I agree with that for that question. For corporations, you could probably have that discussion, but that's not what I'm looking for here. Which is a good point, right? So that's something on the exam, because my essays can be pretty squirrely. I've had students give me great answers to the wrong question. And the best thing you can do there is just make sure you show me your answers before the exam, just to make sure you got the right one. But no, that's exactly right, Jalen, for individuals. All right, what about corporations, though? Yeah, so you're going to explain. So CAPM is the theory we're using. So the financial theory is CAPM. I think the question I actually asked, I think even asked that, yeah, using CAPM. So I even put CAPM in there. So Jacob, what would be important parts of CAPM to bring in here? There's
Risk-free rate.
Yeah, so you can give the formula. I would do that. Y'all remember the formula?
Oh, risk-free rate plus data times market premium.
Yeah, market risk premium.
And minus the risk-free rate.
Well, I do it like this. Some say the expected return on stocks minus the risk-free rate, but that is the market risk premium.
Okay.
Yeah, finance classes do that, the minus thing, but in real life, you won't see the minus thing. It's just that difference between the expected return on stocks and risk-free rate is called the market risk premium. All right, so you got the formula, so that's good. What's key in that formula? What's the one thing that's key in that formula?
Beta.
Beta. So what is beta doing? If I say beta is a measure of, does that help you any?
It's a measure of the risk.
What kind of risk?
Of the risk compared to the market.
All right, so the specific word?
Systematic.
Systematic. Yeah, you got it exactly right. Oh, no, I can't spell it. Systematic. Systematic risk. So you might want to give a quick definition. You said exposure to the market, or I like to say stocks exposure to economic factors by the economy, interest rates, etc. So beta is trying to see how much is this company exposed to things that affect everybody. What other kind of risk is there?
Unsystematic.
Yeah, unsystematic. But this is really key to this question, right? Is what kind of risk?
They're specific that
Yeah, company specific risk. And what's really important to say here, that can be what?
Diversified away.
Yeah, easily eliminated through diversification. So that's pretty critical to your answer, because now you're going to talk, what does this have to do with insurance? So what's your next step, do you think?
does it benefit stockholders?
Yeah, so that's kind of what we're hinting at here. So you kind of hinted at it here. You got a risk that can be eliminated easily through diversification, which your stockholders are already done. And Alec, you might even put here, which stockholders have already done. That's the assumption, right? That it's a well-diversified portfolio. So how do you get this to the insurance equation? You've talked about two risks. We're talking about insurance. What do you want to do next? This is like the really key link to this question that a lot of students miss. We're talking about insurance. Most insurance risk is what? Yeah, most insurance covers unsystematic risk. Stockholders have already eliminated at almost no cost. It's really, really key. Make sure everybody has that in your answer, because it's going to be, you got to put it into your own words, but it's going to be pretty critical. Now here's the tough part. Where do we go next? Have we finished the question? You mean, remember how I forget, I had it so worded, just go great in the notes, but why should management be real careful in your answer, whether you're talking about management or the stockholder? Management's the ones making the decision whether to do insurance, but they're covering risk for other stockholders. So why should management expend valuable corporate resources to eliminate a risk the stockholder has already eliminated almost cost free? Right, that's pretty critical. That number two is really what we're after here. Now, why do we left out? What's the one big thing we have left out? Two things. What's the other big thing? That term I used that I said you won't hear in any other class, so don't use it like a term. It's a term that makes you think you might have to call a plumber.
Sunken.
Huh?
Float. Float.
Float? No, float's the other question. You're in the right direction. It has to do with water, but float is your first paper, the Berkshire Hathaway. So you might call a plumber if you have a
Some sort of leakage.
leakage. What kind of leakage we're looking at? So even when and if risk covered by insurance is systematic. For example, I gave an example of D&O insurance. D&O insurance is tied to markets. Buying insurance still does not make sense due to what was called in the class expense leakage. Do y'all remember that term at all? So how do we set that up?
Like the one company, when they take out insurance, the insurance, you own both, you're as a stockholder, you own stock in both. And so then you just end up losing money to the insurance company's employees.
You can think, I'm not gonna give you the whole thing. Remember we talked about left pocket,
Right.
right pocket? You might give some examples. You got the premium, you got the claims. The premium is an expense to one or revenue to the other.
Mhm.
When they pay a claim, that becomes a benefit to the insurer, becomes an expense. But what do we have? But the insured incurs expenses to manage the insurance product that is a loss to your portfolio. All right. And do you see the logic where we're going with this? Expense leakage can be hard to explain. A lot of students, their entire definition is to write the words expense leakage. That's not enough. That term doesn't mean anything. It won't mean anything to me if you don't explain it. So you've got to make sure you get that. So these are the number 2 and number 3 are the most critical ones that students struggle with. So you start off explaining CAPM. CAPM says there's 2 risks, systematic, unsystematic. We have this formula, has beta in it. Beta is only compensating you for systematic risk. Unsystematic risk is not in the formula because you're going to eliminate that through diversification. What does it have to do with insurance? Well, insurance mainly is covering unsystematic risk, a risk to stockholders, not management, but the stockholders. All right. So be real clear whom you're talking about. A risk the stockholders I've already eliminated. So management shouldn't spend money to eliminate a risk the stockholders already eliminated. And even if you are talking about some systematic risks, and there are some that insurance covers, like D&O, it still doesn't make sense because your portfolio can't come out ahead. It's left pocket, right pocket. You're just incurring expenses to manage the portfolio. And then the last part of the question, probably the easiest part where people got most, but corporations do what?
Right.
Yeah. You buy insurance, and then you give, I forget how many examples I gave you off. I'll tell you on exam how many examples you need. So give examples. We talked about that. That's usually the easiest part. Huh?
So basically, space leakage is just like unnecessary cost.
Well, from the theory, it is. So if you buy insurance from Chubb, the company buys insurance from Chubb, they pay a premium. That's an expense. It's revenue. That's a wash to your portfolio, right? You had a loss here, but you had a gain here. It's a wash. If they have a claim, $500 million, the insurance company pays them $500 million. It's a gain to them, it's a loss. So all the things the insurance company does with their client is that's just left pocket, right pocket. But the insurance company is going to hire employees to manage that customer. That's going to go through the employees, not to the stockholder. So anything you pay your employees is a loss to your portfolio.
And when you speak in that manner, what you were just speaking about, you're speaking from the perspective of the insurer, correct?
Well, it depends on which part.
Right now, what you were just speaking about when you was talking about expense leakage, so you're doing all.
Well, I'm still thinking about the stockholder. Stockholder has these 2 stocks in their portfolio. Oh, wow, they got a new customer. Well, but that's their expense. All right. So from my portfolio standpoint, you're paying your insurance premium. That doesn't help me any because it's like an expense and a revenue. All right. Then they got a claim. Oh, well, that helped them, but that was lost them money. Okay, that's not good. Oh, the insurance company had to hire employees to manage this business. Well, I don't benefit from that. So me as a stockholder, I'm hurt because you're paying employees an expense for a risk I've already eliminated. So it's already gone. So
And that's because you own stock in a public insurance company and then another company, right?
that they're insuring, and I got a bunch of other companies.
Oh,
So if
okay.
this company has a claim, someone else going to have some good news that just happened to come along at the same time, and those risks just offset each other. All right, so I won't go into the reasons why people do buy insurance. That's in the notes, and that's pretty straightforward. All right, so some students really lose a lot of points. Now let's look at the rubric so you can see how the rubric fits in that. So I don't have it necessarily in the right order. I'd probably start with the CAPM formula, explains, or I might start with systematic, unsystematic. What I mean by paid for taking systematic risks, that's what the CAPM formula is telling you. You're doing plus beta times. That's how beta's giving you that payment for taking systematic risk. Systematic, unsystematic can be easily eliminated through diversification. And then the real key right here, see it's worth 15%, is insurance mainly covers unsystematic risk. There is some systematic, but most unsystematic. But even for systematic, for all risk, you have that expense leakage. It's just left pocket, right pocket. And then I kind of gave you a bonus of saying 40% is the 4 reasons, which is the reason, which is the parts most students do well. And it's open book, so it's not like you don't have the rubric. It always shocks me that I give a rubric. I thought the first time I gave a rubric an open book that the average was going to go over like from a C to an A plus, and it went from a C to a C. It didn't change at all. It was exactly the same. So when COVID happened, I said, man, my GPAs are going to go up through, but nothing changed.
So how many lines or sentences are you expecting for each line?
I don't know. It's got to be full definition. Now, sure, draft your answer before the exam and show it to me. If you know, you can talk to people who've had me before when I'm not in the room. They'll tell you he's really picky, and I am, right? I'm really picky. And the reason I'm picky is I'm reading it from the standpoint of you explaining that in an interview, and I'm reading it, did you really fully explain it so the person listening will understand it? A lot of students are like, they're explaining to me like, you know, just enough so I know you kind of know it. And that's not what I'm looking for. I want to know that you really know it. So, you know, it's not like, you know, I could add 2 more sentences, but it's going to take me another 10 minutes. No, I'll just leave it out. No, spend the 10 minutes and put the other 2 sentences in there. Okay, questions on that? I don't even remember when the exam is. Y'all probably worried that it's like tomorrow or something, but I think it's still a ways off. All right. So homeowners has its issues, and I'm going to decide. So Monday I'll let y'all out. Next Monday I'll let you out early but you have to watch this video, okay? But I want to go through mold first and then have you watch it. It's out there on Canvas. It's called mold. It's called Link to YouTube Video on Mold in Texas. All right, so we're going to cover the problem today. We're also going to do the storm surge discussion, which is kind of a soap opera. And when I cover it, I'm going to cover this article right here, article on mold in Texas highlighted. I'm going to cover that. It gives you a very pro-industry view of this. And then you're going to get a very unindustry view of it by watching this videos. All right, I love forensic files. There's forensic file and deadly women, there's a lot of insurance, but most of it's life insurance, people killing people for the life insurance. But here's a property casualty one, which is really interesting because there's no crime here. It's entirely a consumer versus the industry. It's a very sad story, but but you'll get their side of it. So I think once you see the article, but then you watch the video, you're going to see maybe there's an argument for the other side. It's a pretty famous article. This is any of y'all from Dripping Springs or heard of Dripping Springs? So it's a city outside of Austin. When I ride my bike in Helotes, there's a couple that moved there from Dripping Springs, and I asked them about this case. And they said, "Oh yeah, we know all about that." And they were very anti P&C industry because of that case. So everybody in Dripping Springs hates the P&C industry because of this case. So to give you the other side of the argument. But let me give you the industry side of this argument. It's an old case, but it's perfect. And you'll see when we talk about storm surge. So when I give you a case like this, there's a concept I want to make sure you grasp for this industry, especially if you're an actuary and you work in this industry. I want you to see the political side of this industry and why people get so worked up about this industry. So there's the consumer versus the industry side, and this article gives it perfectly. So and I'll tell you, there's one real key lesson in this article that I want to make sure you get onto the exam. So several years ago, this is pretty old, but it works really well. I can't think of another case other than storm surge that's even anywhere close to this. And it was specific to Texas, and that's important to put into your essay, why Texas and not other states. And just up front, if you look at the rubric, oops, where is the rubric? Did I lose the rubric? Oh no, why did I shut the rubric down? Do you notice anything that sticks out in the rubric? Wording interpretation. That's the key to this case. All right, so just to set it up, insurance contracts is language that is overwhelmingly dictated by the state legislatures. It's not like State Farm and USA and all states say, hey, let's put these words in it. There's standardized contracts. The wording is very specific by the state, but by the legislatures. But who interprets the language of contracts? The courts. Do the courts care what the legislature did, or do they interpret it themselves? So what happens when you have a contract dictated by the state and you as an actuary are pricing this product based on what the state dictated you to do, and then the courts radically reinterpret that in another way that you weren't expecting? What's going to happen? That's what the mold case is. And we'll see with storm surge, very similar kind of thing, where storm surge is very specific that it's not covered by insurance, but then the courts were thinking about overturning that. That would be a radical departure. All right. So that's the key in this is, what are the actuaries thinking when they price this versus what are the courts going to interpret it? So all of a sudden, homeowners insurance is already very expensive in Texas. Now, this is no longer true. I forget what state is higher than us. Could be Florida. But at this time, Texas was the most expensive state for homeowners in the country. 83% more than the national average. And because of this mold, Texas companies were asking for huge increases on top of that. All right. Now, homeowners insurance is not as expensive as autos, so it's not as big of a deal. But in Florida, it's a big deal, and people are starting to riot because of what's going on in Florida. Texas, it was getting to be a pretty big deal. Some of y'all's auto insurance might be $879 a month if you got a teenage kid, you know, but homeowners is pretty expensive in Texas. Why do you think it's expensive in Texas? What does Texas have that other states don't have? Huh? So we have a coast. So we have hurricanes. Dallas is the worst. What does Dallas have? Tornadoes, ice storms. Yeah, but I'm talking specifically P&C insurance. But I mean, it's true we have a lot of people here. So that's true. People move here. So we have a lot of housing. So yeah, definitely. But from a homeowner standpoint, so I should have made it clear, but see, from a homeowner standpoint, if you live in Dallas, Dallas is one of the worst places. Have y'all been, any of y'all live in Dallas? You haven't seen the basketball size, maybe that's an exaggeration, but the softball size hill. The tornadoes are terrible. Dallas is right in Tornado Alley. So if you think about Dallas, boy, it gets colder, a lot colder than San Antonio. It gets hotter than San Antonio. It has the extremes. Pretty expensive, and there's a lot of people. I mean, right? It's a good job market. A lot of people live there. Expensive houses. So Texas was expensive already, even before this mold issue came up. The hurricanes and everything else. We even have potential earthquakes here as well. So we're already more expensive. So the toxic, you notice in the title, it says toxic mold. What is toxic mold versus other mold? Well, toxic mold is mold. It's like any other mold you have. It's not like there's some special mold that came into Texas that's not anywhere else. Normal mold like everybody has. The word toxic, it implies that it's poisonous, it's going to harm you, and that's the big debate. This article is going to imply that's not the case, but when you watch the forensic file, you're going to see that there's an argument that it can actually be physically quite damaging. So what is mold doing? They need to raise, they're already 83% higher than the average. They need to raise premiums another 40 to 60%. Now, if you've been thinking about this class, the first question that would come to mind for an actuary would be, is this frequency or is this severity? That's the first question. What do y'all think?
Both.
Both. Yeah, it's both. And frequency is what?
Um,
How often?
How,
How often, the number of claims, and severity is average claim. So let's look and see. So the number of claims, that's frequency, has risen more than fivefold. I'd make sure in your exam answer you use the words frequency and severity. This is both an issue of frequency with the number of claims up fivefold and severity with the average cost per claim jumping from 3,000 to 8,000. You can almost quote this part in your answer, but just add the words frequency and severity. All right, and you've got it. So kind of get in the habit. I always think, what is this? Frequency, severity. You're going to see that when we do credit scores. Is it frequency or is it severity? On credit scores, it's mainly frequency, but we'll see. So the insured losses for mold will reach $780 million, up 60% from 1 year before. So a huge increase in claims. So did suddenly mold become an issue in Texas, or is something else going on here? So it's definitely something else. There's some media coverage that's causing this. People are just, and there's some fraud going in. So mold remediation was something you probably never heard of. I knew people who were quitting their jobs and becoming mold remediators. I don't know what they're doing 2 years later because it wasn't an issue, but they became mold remediators. They were going to people's houses and telling them, you got a mold problem, we need to gut your entire house, filing a claim with the insurance company. I remember helping this one family that had this. And, oh my word, if you open the door and took a step without looking, you're in a lot of trouble, because you'd open a door like to a bathroom and there's no floor. They were very, very expensive, completely gutting the entire house. We're not talking about asbestos. We're talking about actual mold. Mold is, you get some bleach, you can clean it up. It's not a serious issue, but people are coming in and saying, hey, you got mold. Your kids are going to get sick. Your dogs are going to die. You're going to get sick. It's going to cause allergies. And these people are going door to door. The insurance industry said a lot of these people were fraudulent. You can have that debate whether or not that's true or not. Other stakeholders, real estate brokers. Obviously, it's hard to sell houses when you have this going on. Mortgage companies, home builders. Home builders are part of the problem because they were building houses in a way that mold was more likely. You're going to see that as part of the issue. And home repair businesses. So the other thing going on here in Texas is this idea of a Lloyd's company. So in Texas, insurance rates are regulated, but within what's called a range. So a lot of states, you have to get your rates approved. In Texas, as long as your rates are within some range, you're free to use them. If you have to go outside of range, then you have to get specific approval. With the exception of Lloyd's and county mutuals, there are special insurance companies that aren't regulated by the state. So when the mold issue came up, guess what insurance companies did? They moved all their businesses to these Lloyd's so they could charge whatever they wanted. They say so-called Lloyd's. Y'all probably have heard of Lloyd's of London. I don't think there's a relationship, but I don't know. I haven't quite, Lloyd's of London is an insurance company, and I don't know what Texas Lloyd's, but there's also county mutuals, which USAA had a county mutual. So one of the things people are worried about is how do you regulate these companies? That's what the consumer groups are going is like, we have this rate regulation and yet insurance companies are charging us whatever they want to because they're not regulated. Another issue is these mold remediators. How do we control these people so they're not ripping people off? There was no standard on air quality. There's no test. There's no way to know. Who knows what these, you can imagine these remediators going in and scaring people to death, especially with kids. Asthma is a big issue with young people today. It's much higher than it was in the 70s, and you have this mold issue going on. So should you have to be licensed to be able to do this? And then builders. Do we need to change the building code so houses can breathe a little better? We don't have mold hitting. Okay, you don't read this part, so only read the part related to mold. All right. So let's get into this issue and what did it hit? And so there's Dripping Springs. This is not your normal family. They had a $32 million lawsuit over their 22-room house. And you all have a 22-room house. I have a, it's less than 5, I think. So when you watch the video, you'll see the house. I think it's an ugly house. I'm sorry. This might be a thing. It's very dark, really dark draperies. It just, the day everything's open and bright, and it just looks terrible. And I can't see 22 houses when you see a picture of the house. I don't see where they put them all. Maybe there's a basement. You don't usually have basements in Texas. So it's this family here, the Ballards, or Ron Allison and Melinda Ballard. So Ballard, she's the one that, and she's actually in this video. And you can tell she's a really smart person. She explains everything very, very well. So she would have been a pretty intimidating person to be a plaintiff. And so they filed a lawsuit against Farmers. So Farmers is the first one, but obviously if Farmers, how they win or lose this case, it's going to affect the entire industry. So they had a water leak. It caused mold to spread. They went to Farmers. Farmers refused to cover it. It let the mold spread even more, overtook the entire house. You'll see that her husband and her son both got very, very sick. She didn't seem to be affected by it at all. And that's the part I want you to pay attention to is on the health issues. I don't think you can watch that video and not say the mold had a huge medical impact on that family. So you'll see it because her husband lost a pretty prominent job just because of serious memory issues. This is the media case. So they have this person, Melinda Ballard, this woman who is quite outspoken and very well spoken. She knows how to make her point. Massive house, so that by itself. And she gets the news, she gets the press. And suddenly everybody in Texas is thinking about, oh, I got mold in my house. What am I going to do? So now everybody's thinking about it, talking about it. So they asked for, we're going to talk about punitive damage later when we talk about on the commercial side, but 25 million in actual damages and 75 million in punitive damages. All right. So what is the health effect? Homeowners exposed to mold allege many adverse health effects. And evaluation and remediation of mold contamination can displace owners from the home. Remember, we talked about additional living expenses. When you're having mold remediation, you can't stay in the house while they're doing that because they gut everything. It's just completely gone. They're complaining against home builders for shoddy work. So this is all hitting the news. The verdict in this case prompted Farmers and this is important to your answer. The industry said, if we're going to have to pay these claims, we're out of homeowners in Texas. We're just not going to. It got really strange in Texas.
So the Ballard won the claim.
They won. You have to. It's one of those things where they get a big claim and then it gets reduced later, kind of thing. That happens a lot with the punitive. So usually it'll get appealed. But Farmers, I don't know if y'all remember we talked about the different types of coverages. There was one really restrictive one. So Farmers went to that really restrictive one, which is just named perils and excluded mold. And many other insurance companies did that as well. And it got very bizarre. I remember during this time, if you filed a claim, insurance companies were canceling anyone who filed the claim. So they pay your claim and then they cancel you as a customer. And so a lot of people just stopped filing claims in Texas for anything, not just for molds, for anything. So some say, yeah, I had a $5,000 claim. I'm not going to file it. It's like you're paying insurance, but you're not going to file claims. That seems like a really big waste of money. So it just got really bizarre for about a year or two or so there. So go back to who these players are. What do the real estate brokers and mortgage bankers think when the homeowners insurance industry says we're not insuring Texas anymore. They're pretty upset because they can't sell houses. And I always think about this for the P&C insurance industry. It's a pretty hated industry, but they homeowner side almost always has these two groups on their side. Because if the homeowners insurance industry is not working, they can't sell houses. And so they're the good people come in and fix everything because the insurance industry, hey, we're not going to lose money. And no one's going to listen to us because they hate us, but they'll listen to the real estate brokers and they know that's going to be the fix. And sure enough, the real estate guys walk in. And so there was a solution. You're going to put this into your answer as well. What Texas said is they're going to cap losses from mold damage to $5,000. Farmers, State Farm, Allstate, Safeco, they all said that's not enough. And they said we're still out, even with that limit of $5,000. So the industry didn't like it. Real estate mortgage companies protested that they couldn't close on houses. Insurers complained about the contractors trying to sell this remediation work and that there was all these stuff. So no one's happy here. So let's look at the health issues, see if this is true. So here you're getting a pretty slanted side of this. So how long has mold been around? So if you go to the Old Testament in the Bible, like the book of Leviticus or somewhere, it talks a lot about mold. So they had mold coming out of Egypt. They had mold in their tents. So what did they have to do? They had to tear the whole tent down, right? So it was an issue back then. So this is not a new thing. It's not like mold suddenly showed up in Texas. So it's a long issue. It's a common problem. Anytime a water leak, you're going to get mold, especially in Texas where we have a lot of humidity. It becomes a serious problem when it goes unchecked. And the issue, I think you see in the video that it was a leak behind the refrigerator and it just spread up the walls and just went everywhere. According to U.S. Centers for Disease Control, this is pretty key. So this is not the Ballard saying this. This is the U.S. Centers for Disease. No conclusive links have been established between mold exposure and serious health problems. Right? So again, you're going to see if you believe that after you watch the Ballard's case. People with allergies and suppressed immune systems may be more sensitive to mold and fungal infections. Again, no official government studies support claims of adverse health effects. Some doctors in private practice assert otherwise. So there's something you can see on the video. Her husband or son are just having horrible problems. She's on a plane sitting next to this guy. She tells him the story and he says it's mold. And I think the most shocking part of the video you'll see is people refusing going to her house without a hazmat suit on. That's not a good sign, is it? People won't go into your house unless they look like they're, on the moon or something. So, so who's right in this? You're seeing here, it says no big deal. Chronic respiratory infection, asthma, skin rashes, chronic fatigue, short-term memory loss. That's definitely what her husband had. Anxiety, depression. I think there was some of depression too with him. Headaches, nosebleeds. So I think he had a lot of these. I mean, it destroyed his career, no question. And then the insurance companies did not respond quickly enough. Their families became gravely ill, and even their pets died from exposure to toxic mold in their home. So you're seeing the two sides of it. What does the industry say? Hey, mold, get out some bleach, fix it. We're not responsible for maintenance. But the insurance industry is responsible for water leaks. And that's where you're going to see the big difference between Texas and other states. In most states, or I think all 49 states, if you have a leak, the insurance company is responsible for it, but within a very short time window. So any damage that happens within, say, 30 days of the leak. Here, we're talking about several months after the leak, and the mold builds up. So in most states, this was not an issue because there was a very set statute of limitations on this. In Texas, there was like no time limit. You could have had a leak 10 years ago, and it's now creating the mold. So farmers were supposed to fix the leak. But they're like, yeah, we're responsible for that. We're not responsible for the mold. They should have got out the bleach and fixed it themselves. Exposure to mold does not cause illness in all people. The variation in individual response to mold exposure makes it difficult to establish standards. So again, you're going to see this, the Ballards. The wife had no problems. The husband, serious problems. The son had problems. I'm not sure how he came out at the end. He'd be an adult today, so we could probably ask him. Right. Any questions on the health side? So in your answer, you know, you need to put this in your own words, but I do want you to draw some from the video in as an example of one case. And unfortunately for the insurance industry, it was a big case that hit the news, and it was pretty scary, right? You hear someone memory loss, depression, lost his job. You know, that scares you as a parent, thinking that's in your house. All right, let's talk about the state of Texas specifically. So we talk about rate regulation here. The legislators set up a benchmark system. So every state is different. So some of your actuaries, if you become a pricing actuary, you won't be a pricing actuary, you'll be a Texas pricing actuary or Colorado, Texas actuary. And I do think y'all figure this out. I don't think you're gonna have 10 or 12 or 15 states. I mean, you have 2 or 3 states. I don't think it's very state specific, but do any of y'all know how many states a typical actuary has? That'd be good. I still need to work on getting an actuary to talk to this class. So that would be a good, I'll have to find a pricing actuary. So it's very specific. In California, you have to get your rate approved in advance, no matter what. In Texas, as long as you're within this benchmark system, you're okay. So flexible rating allows insurers to charge 30% more or less than the benchmark rate. So say it says, hey, the rate is $500, you can go 650 or you can go 350. If you go outside of that range, you have to come to us and get approval. So you have to justify it outside the benchmark bands to the insurance commissioner. Now, who is the insurance commissioner? So let's see if his name's in here. Montemayor. There he is, Jose Montemayor. He spoke to this class twice. He is retired, an incredibly smart guy. Let me tell you, this is a guy who, to become insurance commissioner, he had to be a CPA, but he wasn't an accountant. So he got his CPA, so he got it like that. I mean, this is a smart guy, right? Somebody says, oh, I'm not an accountant. Oh, I'll get the CPA. That's not easy to do. He's a statistician guy, very, very smart. I'd love to have him speak to the class again, but he insisted on driving, not doing Zoom. And he's in his 80s, and I didn't want to be the one causing his death driving back to Austin at 7:30, 8 o'clock at night. I wish he would have done Zoom. That would have been great. So he was involved in 2 big cases. We're going to talk about both of them. He was involved in the mold case, and he was involved in credit scores in Texas. I wish you could hear him because he was, let me just tell you, I'm going to put it on the video, very pro-industry insurance commissioner. He doesn't want me to say it, but he'll never see this video, but he was very pro-industry. The industry loved this guy. I don't think that the industry say he's pro-industry. I think they would call him fair. So if the industry can get someone who's fair, that's about as good as they can get. Because you go to a state like California, it feels like everybody's against you. So he's the one that's having to deal with this. You have to go to the insurance commissioner. You have to get it justified if you want to be outside of the rate. So in California, you have to get exactly your rate approved. In Texas, as long as you're within that. But it excludes Lloyd's. So what percentage of companies do you think are Lloyd's companies? 95%. Why? Because because of mold. They don't want to deal with that. So exempted Lloyd plans from the benchmark rating system because they comprise only 20% when they started. Now they're 95%. A state commissioner watchdog agency recently filed a proposal to prohibit insurance companies from refusing to insure homes because of prior water damage claims. The OPIC noted that more than 90% of insurers refused to sell homeowners insurance policy if a consumer had made any kind of claim to previous policy. That's why people stop filing claims. For probably about a year, and me didn't go on forever. For probably about a year, people just stopped filing claims. I remember people saying that. It's like, yeah, we had a fire, but we'll just fix it ourselves. That doesn't make sense. I won't say Texas is unique. I don't know how many states have a benchmark system. There's some that have, you can charge whatever you want to. A state like Montana, whatever you want to charge. There's only like 6 people in Montana anyway. So, it's charge whatever you want to. There's no big debate. There's not that many houses. It's a pretty small state. Other states like Hawaii, California, very, very political. So the big difference between Texas and California is that Texas's insurance commissioner is an appointed position. In California, the insurance commissioner is elected by the state. And no one's going to run for insurance commissioner promising higher insurance rates. They're going to promise lower insurance rates. And so that changes the climate. All right, the policy themselves, you get more coverage in Texas. Mold is a good example of the state just covers more. We've already talked about the standard policies, A, B, and C. 96% of homeowners buy B, which covers replacement costs for most kinds of damage. Mold damage is covered if it results from a covered loss, roof, plumbing, or foundation leaks. So mold's covered. The difference is timing. Time is the key here. Flood is not covered. So if you have mold because you had flood and water got into your house, the mold from that, the insurance company says we don't cover that. So it has to be a covered loss. So it's not like insurance covers mold in your house. It covers mold in your house from a covered event. All right, that's pretty critical. So what are the TDI? Y'all know what TDI is. That's the insurance commissioner. So Jose Montemayor. So this isn't the final answer, but this is what he proposed. The $5,000 limit. You're going to put this into your answer. It applies the cost of testing, repair. So a lot of these costs go against that. So 5,000 covers all of this testing, repair. If you want more, you can buy more. You can buy 25% more, 50% more, 100% more, but you have to pay a higher premium. You can have multiple claims. So this is what he's proposing. Not all of this got in, but the 5,000 did get in. All right. So what was the reaction to this? Supporters are the real estate brokers. They say it's a good compromise. It meets both the needs of the consumers and the insurers. Most mold claims were less than 5,000 anyway. Maintaining a reasonable amount of mold covers for consumers. The plan would keep insurance rates affordable. So that's the other thing to think about. If you let this get out of hand, insurance rates in Texas are going to just get way too high. If consumers know that only 5,000 is paid, that gets that morale hazard. They'll clean up their houses. They'll make sure if you have a leak that you get the Clorox out and wash everything you possibly can. Mold's pretty easy to kill. Hefty increases in rates are going to make it hard to sell houses in Texas. That's what Florida is going through right now. Higher rates will also reduce the availability of homeowners insurance. One thing you're going to notice in a lot of these discussions, so there's 3 things insurance companies talk about: affordability, availability, and I forgot the third one. We'll see it in the credit scoring. Affordability. Oh, adequacy. Insurance rates. Affordable kind of is obvious. You can afford to pay it. So if your homeowner insurance rates are $500 a year, that's affordable. If they're $5,000 a year, in some states like Florida and California, they can get to ridiculously high levels, not affordable. So this focuses on the consumer. Availability is, will the insurance industry offer? So availability is there a company that will sell you a policy? It might be affordable because the state's mandating a rate, but if insurance companies have all left the market, there's no availability. And adequacy says is high enough for insurers to make profit. Make a reasonable profit. We'll talk about that more. So affordability, availability, adequacy. So affordability, if the state comes in and dictates rates, that can make it affordable, but then the industry says, we're out of here. You're seeing that in Florida now. You saw that with mold here in Texas. You're seeing that with earthquake in California and mudslides and other kind of things. So the insurance industry says, we're not going to write this business if we can't make money. We're out of here. And so then you don't have availability. And then adequacy is you charge enough. And what the insurance industry likes to say, see if you like this argument. Let us charge what we need so we can make insurance available. The insurance industry loves the word available. Let us charge the right rate and their insurance will be available. Why does an insurance industry talk about affordability? Because it just sounds terrible. It's not affordable to some because they are bad risk. Do you want to say that? Yeah, it's not affordable because they live on the coast with a lot of hurricanes. Of course, it's not affordable. It's going to cost us a fortune. So is there a societal benefit to this argument? What if we have so many hurricanes you can't afford insurance on the coast? What would happen?
Not available.
No.
It won't be available.
So it's not available. What's going to be a result of that? People will do what? Stop building houses on the coast. Would that be bad for society or would that be good for society? Sounds like a good thing. In some states, there are some drivers that are such horrible drivers, they can't afford auto insurance. The state says you've got to provide insurance to them. The insurance industry says the state provides buses and trains and metros for those bad drivers. Do you really want to do whatever you can, put bad drivers on the road? What happens if bad drivers can't afford insurance? What are they going to do?
They're
They're going to stop driving or drive illegally. Yeah, so that's the other side. So the insurer said affordability is an issue of bad risk. What do consumers say? Affordability is insurers overcharging. So which is it? Is it insurers charging the right rate or is it insurance? And we're going to talk about that later when we're talking about regulation. Is there proof that insurance companies are making above reasonable profits? And you're going to find this is not a profitable industry. They're not making killer returns on their capital. So we'll get into that. But you can see the debates here. One thing you can see in this article is this concept of a consumer group. So how many in here are consumers? Anyone in here consume?
Yep.
So how many of you are a member of a consumer group? You must be, you're consumers. What is a consumer group? I put it in quotes. Who do you think is behind consumer groups? What profession do you think is behind consumer groups?
The government,
Not the government.
Insurance.
No, the insurance companies hates consumer groups.
Lawyers.
Lawyers. You delve down into a consumer group and it's going to probably be personal injury lawyers. Why? Because the insurance industry is a huge source of revenue for them. And they don't like it when the insurance industry clamps down on these kind of things because they're a big part of this. So now the insurance industry has their groups too that they hide behind. on the other side, but it's a debate. So insurers love the word availability. The word affordability there is like, it's not our problem. These people are bad drivers. They're living in dangerous areas. Don't blame us, blame them. Consumer groups focus on affordability, and they think it's the insurance. In fact, some consumer groups say the reason insurance companies have to charge so much is because they're just so sloppy with their expenses. They're having parties every week and they're just wasting money everywhere, which, you know, I doubt that's the case. I didn't notice that at USAA, but all right. So, all right. So here's the group. So the realtors say we need to compromise. We just need to be able to sell houses again. If we let insurance get out of hand, so this mold crisis causes another 40, 50% increase, people are going to stop coming to Texas, even with the good job market. We're not going to be able to sell houses. So the real estate market, I don't know what percentage of our legislatures in Texas are related to the real estate industry, but it's a pretty hefty group of people, pretty powerful group. So see the word availability right there. Higher rates also reduce availability of some homeowner insurance would impede home sales. That's not worded very, very well. I think they should have said higher rates would also reduce the affordability of homeowners insurance and would impede home sales. So insurance industry say, hey, let us charge higher rates and we'll have availability. Insurance companies don't mind charging the right rate. They'll insure anyone. So if you got a $5 million house on the coast and there's 100% chance it's going to get destroyed by a hurricane, the insurance say you almost charge them $4.9 million. That's fine. We'll provide that coverage. The spike in high cost motor claims. Okay, this is the other argument, which is true. It was temporary because of that media coverage of the Ballard case. And that was true. The case kind of went away. Mold remediators just disappeared and the issue essentially disappeared. Now the opponents, the funny thing on the opponents is the opponents are consumer groups and the industry. These two enemies both oppose this. So here's the industry. Rather than more regulation, free market competition will encourage insurers to provide the greatest variety of products and services at lowest prices. What word did they use? Availability. Decisions about availability of and rates for mold should be made by insurers and consumers in open market, not by government regulators. It is not intended to provide health insurance. That's the other argument they made. Mold is a health issue. It's not environmental protection. It's not home warranty. The HOB policy needs to be reworded to more specifically define the loss. So the actuaries read the language and they said this isn't covered. And then the courts are saying, no, it is covered. We need that clarification so that we can price our products correctly. Insurers unfairly are being held liable for losses due to construction problems out of their control. And is this an insurable risk? Should it be insured at all, even if you question the health hazards? So I think part of the argument in this, you might get this watching the video, is there's a possibility in my mind that the Ballard case was legitimate, but incredibly unique. Something really unusual. When you look at that house, that's one reason I point out that it's a very dark house. It seems like a really, really shut-in house. And it's an old house, too, as massive as it was. And it's in a place called Dripping Springs. So, you know, a lot of water around. That it may be possible this one particular very media-focused case was a very unique one. What they experienced was very different than whatever else, but that's the one that hit the press and so got everybody thinking. So I think that may be part of their argument here. And the insurance industry wants to control this remediator business. The other opponents, they have to say other opponents because they're a very different group of people. This is the consumer groups. TDI should impose no restrictions on mold coverage. Since Texas has the highest rates already, there's no reason why we need to limit what insurance companies are doing. The rates are already good enough. They're already too high. Rates should be coming down, not going up. New premium comparisons by TDI show that the vast majority of insurers have priced a policy higher than the benchmark. Right, that's true. Why? Because they're in those Lloyd's. But why are they pricing higher? Because they're not making money. They're charging more. So this is kind of a strange argument. The consumer group saying, hey, the benchmark rates, they're outside the benchmark rates, and the insurance industry saying, yeah, that's because those rates are way too low, because we just had this new rush of claims come in. Insurance could limit the cost involved by responding more quickly. So maybe that's a legitimate argument. If farmers had come in more quickly, and had provided money to fix the leak, maybe the mold wouldn't have been a big issue. I could kind of see that. They're complaining about the Lloyd's. They want to clamp down on the Lloyd's. The cap of 5,000 is inadequate. I love this phrase. I love this phrase because I think it's ridiculous. So you're going to hear my biases here. It would shift costs from the insurance industry to the consumer. Now, why don't I like that phrase? What does the insurance industry do? They pass all their costs on to consumers. That's what insurance is. This is not some gambling thing. So if claims go up 10%, guess what insurance premiums are going to do? They're going to go up 10%, right? This is a cost plus business. The insurance industry has claims. They pay those claims plus expenses plus a profit. So they don't shift. I mean, they do shift. That's the whole nature of the business. When claims go up, their costs go up. Everything's shifted to the consumer. If people have more automobile accidents, auto insurance rates go up. All right. So somehow get this in your notes. This is the insurance business. The insurance business, by its design, shifts its costs to the consumer. So I agree with them on this, and I'm saying that's right. That's what should be happening. And that's the industry's argument, is rates are up because claims are up. And that was absolutely true. Claims in Texas had skyrocketed during this time for other reasons, not just because of mold, but mold was a big one. Again, they don't like the Lloyd's. I don't know why they don't mention county mutuals. County mutuals, or at USA, we had county mutuals. I don't know the real difference in all of those. And the insurance commissioner authority prevent. Now, I don't know what y'all think about this. We'll talk about this when we talk about storm surge. Should a state regulator of the state of Texas be able to tell farmers who's stationed in Illinois to say, you're in our state, you're writing business in our state, you're losing money, but you're not allowed to shut that business down? Should a state regulator be able to tell what would you think if you started a business in California and you're losing all kinds of money, so you decide to shut it down, and the state of California says, no, you have to keep operating that business at a loss? What would you think? Would you think you had a constitutional claim that you could take and fight in court? Should a business be forced to keep writing and losing business? So that was their argument, is don't let them leave the state.
Don't they also do like things like banks?
I haven't heard of a bank not being allowed to shut down. I don't know. If you see some cases, send them to me. Now in Florida, what they say in Florida is you may leave the state farm, if you leave homeowners and auto. But if you leave for homeowners, you also have to leave with auto. And auto is very profitable in Florida. I think that should be illegal as well. Why? Well, because Geico doesn't sell homeowners. So why should you force State Farm to do homeowners and auto, or Geico only has to do auto? It doesn't seem fair to me. But I don't, as far as I know, the insurance industry has never taken this to the Supreme Court. But we'll talk about it later when we talk about the Commerce Clause. The Commerce Clause specifically says, if a business outside of Texas does business in Texas, the state of Texas doesn't have jurisdiction. That's the federal government that regulates that. But yeah, I mean, this is a common theme, is, yeah, they're losing money, but you should force them to stay here and keep running that business. It's an interesting argument. So this is maybe a little bit more balanced, but I think you can certainly see whoever wrote this has some positive view of the insurance industry. All right. So This weekend, I know you're working in your paper, but this weekend, I want you to watch this video. It's 22 minutes. So next Monday, I'll let you out at 6:50. All right, does that sound fair? I'm giving you 20, well, maybe 6:45. So I'll give you 35 first. All right. But do watch it and take notes while you're watching it relative to what we just covered here. All right. So you want to draw some of this video into your paper, and then we'll talk about the video next Monday. So watch it before next Monday's class. Wednesday, we're going to talk about storm surge. Storm surge may seem a little tedious, but I want to give you the soap opera of the P&C industry. I want the actuaries to understand what you're facing in this industry, the good and the bad, and the ugly, all of that stuff in this industry. All right, I'll stop it there. Last class, we made it through the first article on mold in Texas. I have an updated article out there. Oh, this is the resolution article. Real similar to the first article, just shows you what came out at the end of it all. It was interesting hearing Jose Montemayor talk about this instance. He said, and when the public had their ability to come and comment on it, he said there were some really weird people coming up, all kinds of costumes on, all kinds of stuff, arguing that you shouldn't put any restrictions on this, and he wasn't buying it. He was kind of rolling his eyes at some of them. But it was a crisis in homeowners insurance market. Most homeowners insurers will have some protection, but the coverage for expensive procedures as air testing disposal will be eliminated. So some of the stuff a little different what we saw in the expected. Those who want full mold coverage will have to pay higher premiums in a state that's already pretty expensive. The insurance industry didn't like the plan, is too little too late. Although I have to say, it essentially just disappeared and went away after a few years after the Ballard. So the industry essentially went back to what they were doing. But the industry had sought to eliminate all mold coverage. And their argument is, and this is pretty important, they cover water leakages. A water leakage doesn't cause mold unless it goes on for a long, long time. It takes a long time for mold to come in. That's not their problem. That's maintenance. The homeowner should take care of that. That's not their issue. But in Texas, they were being forced by an interpretation of law to do the language. So consumer groups also criticizing is giving too much away to the homeowners, whoever the consumer groups might be. The TDI indicated the cost of mold-related claims had increased ninefold. All three of the state's largest insurers, Allstate Farm and State Farm, have quit selling comprehensive policies. That's that HO 3 or whatever in Texas they call it. 96 homeowners have HOB, the common requirement to obtain a mortgage. Farmers hopes to persuade his customers to buy limited coverage using HOA. So, yeah, premiums are going to go up for less coverage, but the question is, if you gave them more coverage, premiums will go up even more because it's a pass along. So you get these complaints that don't seem to really understand how the insurance business works. Jose Montemayor's order retains some existing mold coverage in the standard policy, but only if it is water leak and reported by the homeowners within 30 days. So that long term was taken out, which is probably the main thing the insurance industry wanted. So that's the update. I haven't heard a peep on mold since. So it's one of those issues that was a massive thing and then just disappeared. So before we get into storm surge, let's make sure we're comfortable with. So what I'm looking for is some setup on this question, maybe a little history, maybe bring in the Ballards there, the media attention. The frequency severity is easy. Just give me the numbers. Talk about the ninefold increase, the average claim. Just I want to make sure you understand what frequency means, what severity means, that you can intelligently talk using those terms. And it's important to say that Texas was already the highest and rates were rising because of this mold. The real key is the wording interpretation. If you don't have this in your notes, we'll test it on this maybe next Wednesday, let you give it a chance. But So the key is a policy that insurance companies write. A lot of that language is dictated by states. The other thing we know is the legislation dictates language, but it's the courts that interpret them. And the courts don't have to go back and interpret it and figure out what the legislator wanted. The other thing you're going to see with language is if there's any ambiguity, the courts tend to side with whoever wrote the contract. Now you might say, well, the legislature wrote the contract, but that's not what courts say. The courts say the insurance company wrote the language. So if it's ambiguous, you side on the person who didn't write the language. So the insurance industry is behind the 8 ball on this. No matter what they do, they're going to get harmed. So they like really clear language. They like good interpretations. Now the legislature passes a law for the interpretation. The courts have got to stick with whatever that is so they can make it really clear. So what happened is courts were interpreting it based on the language they had, and it was covering a lot more than the insurance industry expected. So the actuaries are pricing on what they think the language means and how it's going to be interpreted. The courts then reinterpret it in a way they didn't expect it, and now they got to increase rates really dramatically, start denying coverage. So this is all about the contract and contract language. It's a big issue for insurance industry because the language can get pretty complex. The reason the language is so complex is because each of these cases come up. They have to add new language to clarify that, clarify this, so it just loads up on itself. You definitely want to talk about the health risk of mold. So you got a somewhat biased view in this article. I want you to bring in some comments from the video. You'll definitely see. Has anyone watched the video yet? Have you? So you see what I mean on the health side. I mean, it seems like there's something there, at least on their side. Have some discussion who the players are. The first article does a good job of that, listing all the different players. You got insurers, whatever consumer groups are, but probably lawyer groups. If you're going to talk about consumer groups, I think there's 2 consumer groups. When you're really talking about consumers, is those that file mold claims and those that never file mold claims. So those that take care of their house, use bleach, they don't need mold insurance. So the fact that the industry covers mold is going to make their rates going to go up higher. So they're hurt. So consumers that would never file a mold claim, they're hurt if mold is covered. And then you have those that, like the Ballards, who need the coverage. The real estate industry is a lot of people. It includes real estate home builders, home sellers, mortgage companies. It's all those people in that industry. Remember, the construction people are part of this equation. Are they constructing houses in a way to make them more likely to have mold? I didn't put the remediators in there, but I would definitely discuss them. Those people go around with the testing. That was somewhat of a shady group. And regulators. So who are the players? Use that first article to help you with that. One thing you always see in these, and you're going to see this with storm surge as well, and you're certainly seeing that in Florida right now, is the insurance industry is hated. It gets beat up a lot, but their final solution is we take our toys, we go home. We just want insurer. And that's their option, and that's the way they usually. So what happens is they threaten to leave the market, and the real estate industry steps in and says, well, we can't sell houses if you do that. And so they get them on their side. Talk a little bit about the compromise for regulators. You can just summarize what that maybe from that second article, and then we'll talk about storm surge. Or we'll test this a little bit next Wednesday to see how you are getting along with that. Those are the only 2 essay questions on this exam. The one on CAPM and corporations buying insurance, and this mold issue. All right, so you got 2. You could essentially start writing those answers now because you've got it fresh in your mind. And you have 2 math problems. We haven't done either of the math problems yet, but they're pretty straightforward math problems. All right, so you're ready for some soap opera. So some students really struggle by what do I mean of tying the mold issue to storm surge. And this link is language interpretation, but the outcome is very different. In Texas on mold, the courts interpreted language in a way that really harmed the industry. On storm surge, if they had, it would have really devastated the industry, but they didn't. But they were on the edge. It was close. So the courts did not interpret storm surge against the industry, but we're going to see that. Let's walk through this. This may be a little tedious to get through, but I want you to see these two hated groups of people, personal injury lawyers, property and casualty insurance companies, these two hated groups that are fighting each other. I want you to see how these groups really fight it out. It's really kind of sad. So Katrina was a big deal. Y'all were probably not alive. I guess y'all were alive then, Katrina, but y'all don't remember Katrina, do y'all? Too long ago. I remember visiting whatever base. They brought a bunch of people from New Orleans here. We went by, my church went by, and we were like taking orders for clothes. What size jeans you wear? What shirts do you need? Because who's the that help group? I can't remember the name of it. But they were getting set up and they were so slow. People were like, I don't have any clothes. So we were like going shopping and bringing clothes back. So there was a lot of people displaced, especially in New Orleans. It was mainly flood. All right. That's going to be really important to this case because remember, the insurance industry does not cover flood. They cover wind. So most people displaced mainly from New Orleans were people who, were flooded out, lost everything. A lot of them came to San Antonio. I don't know how many went to Houston, but several thousand came to San Antonio. Probably some of them are still here. We actually adopted a family that stayed here for quite a while, and they actually did much better in San Antonio than they were doing in New Orleans. So hit in 2005, it's still one of the largest catastrophe events in U.S. history, but from the insurance industry, it wasn't that big of an event because it's mainly flood. So it's one of those things where you had a big cat, but the insurable losses weren't large because it's mainly flood. And so this thing called storm surge. So what is a storm surge? We'll look at the definition of it here pretty soon. But when a hurricane comes in, the wind comes first, and then the waves come. The wind is covered by insurance. The waves and the flooding is not. But when the insurance company shows up, the adjusters show up, they just got a slab of concrete. And now they have to decide how much damage was because of the wind and how much was because of the flood. A practically impossible thing to do. It's going to be somewhat theoretical because, you don't, unless you have videos of the thing or whatever, it's going to just be some subjectivity, and you're going to see State Farm did some things that are a little bit questionable and got them in trouble. So, but it brought some huge storm surge into the whole coast. And we're going to talk about this guy, Ricky Scruggs, just how famous he is. He was probably most famous for suing the tobacco industry, made millions and millions off of that. That wasn't enough for him, so now he's going to sue the insurance industry. So here's the key to this whole case. This did not happen, but just so you know, there was fear that the courts were going to come in and force them to interpret these contracts retroactively, completely what they didn't intend. Essentially, what Scruggs was trying to do is get the courts to interpret that insurance companies were responsible for storm surge, flood. And that's a huge deal. If that had happened, it didn't happen. If that had happened, there's not an insurance company in the world that would have insured the coasts of the U.S. They would not have done it. So yeah, he started off with the tobacco. He made 800 million. You think that'd be enough, but it wasn't enough for him. So he decided to go to jail with his 800 million. So he's going against the industry, but he got in trouble. We'll see why he got in trouble. Bribing a judge, not good to do. He's done it more than once. So you would think once you make your first 800 million, you probably wouldn't risk bribing a judge. Why sacrifice all that? But he decided to do it. I'm going to focus on the yellow. All right. Now, storm surge is covered by the federal flood program, but the limits are pretty low, and these houses are pretty expensive. Most residents don't buy it, and those that do buy it, you might get $350,000 if you got $1 million house. That doesn't help much. So Scruggs says, I'm going to step in and help you. He hatched this this plan to try to make private insurers pay no matter what their contract said. So you see, then again, this gets back to the contract. You can see the little game he played in this. Now, did he have a case? He does have a case here, but not what he's trying to do. We're going to see State Farm did do some things that probably you could question in court, but not what he was wanting to do. So we have other players here. Hood is a politician. You're going to see some other politicians, some very famous ones that you probably haven't heard of, but they were very famous at the time. So State Farm's policy excluded coverage for flood, surface water, waves, tidal water, tsunami, sage. I don't know what a sage is. Y'all can look that up. Overflow of a body of water or spray from any of these, all of which driven by wind or not. Where do you see the word storm surge in there? It's not in there, but that is the definition of storm surge. That's part of Scrub's definition, is they didn't have the word storm surge in their policy. But how do you say you're covered for storm surge, but you're not covered by these? I mean, that's, you know, what would storm surge be if it's not one of those things? So that's essentially the definition of storm surge. So it stood the reason that coastal homes had suffered wind damage. That makes sense. It was clear that insurers were on the hook for the wind damage. But once the water came in, it reduced everything to a slab. All of that was not covered. So essentially what it had to do was percentage. What percentage was wind? What percentage was water? So you already can see a court case coming up. State Farm is going to say it's 20% wind, 80% flood. The homeowner is going to say, no, it's 80% wind, 20% flood. Who's going to decide that? We're a bunch of engineers, meteorologists, whoever. Someone's going to have to sit down and figure out the math on that. So if adjusters couldn't detect objective evidence of wind damage, they offered 0. That doesn't seem fair either. It's pretty obvious you have a hurricane. As Katrina wasn't a ridiculously strong hurricane, it was more of a flood issue, but it was enough that it probably did damage. So to say that it was 0, that doesn't make sense. All right, so State Farm's getting these engineering reports from Forensic Analysis Engineering Corp. She claimed had been incompetently performed. Their engineers, for instance, had attributed damage solely to wind, where adjusters had previously documented extensive flood damage. So you can see here, State Farm's initial report that they got from this consultant said there was more wind damage, and they didn't like that. So, you know, you guys need to go back and redo your report. That's starting to sound a little shaky, doesn't it? It's a little shady. So the firm's president talked this person, King, at State Farm, into giving the company another chance by having a second engineer re-inspect the site. And guess what the second engineer found? Oh, you know what? It wasn't that much wind damage. So the engineers that wrote the controversial report, they left the company, and 20 of the reports were revised after a re-inspection. The dispute ever since I've been whether King was angry about shoddy work about the reports. So State Farm, there's definitely an issue here. I don't know how unique this was to State Farm. I don't know what I was at USA at the time. I don't remember what USA was doing here at the time, and Farmers and some of these other companies. Scruggs is going after State Farm first, and you'll see why, because of these two sisters. But there's definitely something going on here that you could certainly question. You know, if I'm the homeowner, I don't want State Farm saying, you know, I don't like that report. You know, the King had a legitimate complaint, maybe, but it sure doesn't look good. The optics of it doesn't look good. All right, so here we get the Risbig sisters. All right, here's where the soap opera starts.
Sir, quick question. Does it ever operate the opposite way, meaning us as the consumer? Well, we didn't like that you said that it was no wind damage. Can we get somebody else to come in and give a no?
Well,
no,
you can sue them and take them to
sure.
the court. You certainly can do that.
So, okay.
And that happens a lot. Yeah, insurance companies get sued. A lot of times it's like what he's doing, Scruggs, they like class action lawsuits.
Okay.
Because if you can get thousands of people, and we're going to talk about that when we talk about tort reform. The wonderful thing about class action is there are certain courts that are much more favorable to plaintiffs than others. And when you have 1,000 people suing, you go through those 1,000, you find the ones that are in the right jurisdiction, and then you sue in that court. So there's a lot jurisdiction shopping. So yeah, Scruggs is definitely going to make it class action because he makes a lot more money doing that. He gets thousands of people. It makes it a lot harder for the insurance industry to fight it because they have to take claimant by claimant by claimant. So, all right, Rigsby sisters. Who are these? These are two sisters who work for State Farm. And they noticed that some policyholders had these two engineering reports that contradicted each other. So they suspected fraud. So what did they do? They sort of started photocopying these documents and for some reason showing them to their mother. Now, I don't know how they got away with this because we're talking thousands of pages. Can you imagine? You don't know what copying is, do you? You would have been, taking pictures of it. At UTSA, it was impossible to email stuff home. I don't know if that's still the case. But you couldn't have emailed it. I don't know how you go home, and thousands of papers. I don't know how you sit at a copy machine making thousands of copies and someone doesn't notice, your boss doesn't notice that. But they started copying it. A few days later, Scruggs showed Attorney General Hood. So he's telling the Attorney General the two engineering reports from the Scruggs sisters. All right. Rigsby's alleged that the insurance were fraudulently shifting their Katrina liabilities to the flood program. So here's another big deal. If this is true, there's a whistleblower law in the United States, and they could report that the federal government could sue State Farm, and then the Rigsby sisters could get a percentage of that as part of the whistleblower. And so that's going to be important as well, because if they're shifting their costs to the federal government, that would be fraud on State Farm side, or could actually be criminal claims made. So the whistleblower gets 15 to 25% of that. We're talking something, the State Farm's not shifting $500,000. They're shifting hundreds of millions of dollars. State Farm doesn't know these sisters are doing that. They're still working for State Farm. So they downloaded 6,000 pages. How do you make 6,000 copies from their data? How do you download that much? And the IT people don't realize. And made 2 copies of each. So we got 12,000. A ream of paper was what, 500? So we're talking 24 reams of paper. How do you have 24 reams? You would run out of paper, wouldn't you, in your department? Just like running all around the company and just kind of stealing a ream of paper. I don't know how they did that. On Monday, they gave one set to Hood, one to another attorney, and they made 2 copies. I guess they had 4 copies, and put the third one aside to Scruggs. Now, there's a little problem here where you have the district attorney somewhat in cahoots with the guy who's gonna make a lot of money suing the industry, and he's not supposed to be doing that. So that's pretty shady. Who do you think is maybe going to donate to Hood's re-election campaign? Any guesses on that? Probably not State Farm, but maybe Scruggs. The morning after, the Rigsby told their supervisor what they'd done, and they were terminated. So Scruggs hired them as consultants, paying them $150,000 each, and they essentially they didn't know what their job was. $150,000 back then was a lot of money. And they really didn't know what they were supposed to do. They had no prescribed hours. So essentially, he's paying off these women to get him this information. You can't pay witnesses like that for their testimony. That's not legal. So Scruggs is already in trouble. He hasn't bribed the judges yet, but he's already in trouble. By now, Scruggs was also scoring victories with politics. Why? Well, this guy, Trent Lott. Have y'all heard of Trent Lott? Mm-hmm. You have. Has anybody else heard of Trent Lott? He was a famous senator. I think he might have. Did he run for president?
Oh, so yeah.
I can't remember if he did or not. He may be dead by now. Does it show his? Yeah, I don't know if he's passed away yet. He may still be alive. Looks like I guess he is.
So he's probably still alive.
Yes, he'd be 80, 82 years old. So senator, very important senator. He was the majority leader when the Republicans had a majority. He made some really stupid mistakes, like complimenting Storm Thurmond. That was pretty stupid. That got him in a lot of trouble, but he is very powerful person. Well, guess what? He has a house on the coast that got damaged by Hurricane Katrina. So the plot thickens here, but very, very influential person. And he's going to say some interesting stuff. So Scruggs' brother-in-law, Senator Lott, whose Shoreside home had been damaged. Lott and Taylor began supporting legislation that would have helped Scruggs out. So it's nice to have friends in high places. I don't care what that country music song says. High places is a little bit better. So was there fraud going on? And now you see they're broadening out beyond just State Farm, looking at all of them. So now you're starting to see some pretty shady activity. Your comment that you will dedicate your next term of office to bringing down State Farm and the industry, but through all means available to you, including legislation designed to harm the industry, was very unsettling to say the least. Lott and Taylor didn't join an effort to repeal the antitrust. We're going to talk about this, the McCarran-Ferguson Act that protects P&C and life insurance companies from federal legislation. They were going to shut that down, even though it's been in place since the 40s. So you've got some pretty strong enemies there in Trent Lott, a very powerful person, very influential. If he shows up in your office, you're going to make time for him because he's got quite a bit of influence. And a senator. And we're not talking about a House of Representatives. We're talking about 1 out of 100 people here. Scruggs begins settlement talks with State Farm. And here's where Scruggs really messed up. So he's saying, okay, State Farm, let's settle. They reached a tentative deal. State Farm would pay $80 million to the policyholders, $80 million to 640. So let's do that. See if I can do 80 million correctly this time. 80. Is that 80 million? How many days say 640? So 125,000 each. Not much from their standpoint. If they got $1 million house, floods covering 350, they get an extra 125. Not huge, but it's something. Another 26 million just Scruggs. So he made 800 million off tobacco. He's gonna make another 26.5. But State Farm said, you got to get Hood off our back. If how often does a district attorney actually have criminal charges against a company? That can be devastating for a company. I don't know if y'all remember Arthur Anderson and some of these firms that just put them completely out of business. So State Farm says, hey, I'll send you 26.5 million if you get Hood off my back. So what does Scruggs want to do now? So he's opened this Pandora's box. He's got all these politicians, everybody working on his behalf, and now he wants them to what? Cease and desist. So he's got a problem, right? He's got it out of control. So Hood says he made it clear to State Farm he would not combine discussions of civil and criminal cases. So now Scruggs got a problem because he wants the criminal case dismissed so he can settle on the civil. So a prosecutor is never supposed to use the criminal process to try to get more out of the civil case. I will set him at the table and pointed at every one of State Farm people who said, I don't even want to talk about the criminal investigation, but according to State's deputy insurance commissioner who was present, Hood's linking of the civil and criminal matters was at times both explicit and outrageous, such as, if they don't settle with us, I'm going to indict them all. That sounds like he might have connected them a little bit. All right, so you see Scruggs' problems. So you can see why he's bribing judges now to get out of this. So he wants to get his 26.5 million. State Farm is playing hardball. They're not stupid. Scruggs offered, okay, now you're getting some interesting guys. So this is when it looks like it's gonna be a pretty good made-for-TV movie, right? Balducci is not a great name. Balducci, is that how you pronounce it? Balducci, I don't know how to say it. And his business partner, he offered him $500,000 if he would meet with Hood, and they probably should have put the word persuade in quotes as well. Balducci told Hood that if he didn't call off his people, Scruggs would fund a different candidate to run against him for attorney general in the next year's primary. All right, so which industry is more evil, insurance or the lawyers? You know, you can probably make a strong case for both sides in certain cases. State Farm cut his legs out from under Scruggs. It took essentially the same deal it had proposed. So State Farm says, hey, forget Scruggs. We're going to do this deal with Hood, and offered to make it available to policyholders through auspices of his office. Policies would get all the benefits of Scruggs and Hood. Scruggs and Hood had one for them. The only difference was the lawyer wouldn't get anything. By the end of 2007, State Farm paid $73.4 million to the policyholders. So essentially, they just said for Scruggs, we're just going to deal with the state. So Scruggs messed up. So yeah, he should have just, you know, he gone too far, and now what does he do? Balducci, so here what he do next? Balducci went with Lackley and said he considered a personal favor if Lackley were rule for Scruggs. So now we're starting to bribe lawyers. He added that when Lackley retired, he hoped he would take on a counsel with his firm. That sounds illegal. That he kept a poker face at the meeting. Lackley didn't call the FBI and turn Balducci in. Judge Acker, overseeing this case, recommended that Scruggs be prosecuted for criminal contempt for allegedly violating an order he had entered requiring him to return all the documents that Rigby's had taken. Acker suggested that Scruggs disobeyed his order to further plot. A plot with Scruggs and Hood had teamed up to bully State Farm. So he's got a couple of judges after him. At a take meeting, Lackley asked Balducci for $40,000 in exchange for the order he wanted after contacting Scruggs' office to get the green light. Balducci agreed. He delivered the last payment November 1st, and the FBI arrested him. $40,000 doesn't sound like much. It was several years ago. Maybe it'd be $100,000 today's dollars. Balducci discussed with Scruggs whether Lackey's draft order read the way he wanted and told him Lackey wanted an extra $10,000, and Scruggs said, I'll take care of it. These are being taped phone calls. Balducci told the FBI that he had helped Scruggs try to bribe a different judge. That's the second case he's got against him. They contributed $472,000 to Hood's reelection, or to an association that gave $550,000 to Hood's campaign. His total was $739,000. So Scruggs was a huge part of Hood's reelection campaign. Now, I don't know. Let's see. We're talking Louisiana here, I think. Well, I forgot. I think we're in Louisiana. Maybe it's I can't remember what state, but you would think it'd be a Republican district attorney, but or whatever attorney general. So I don't know what competition he had in the primaries or what, but that sounds like nothing today, right? We have billion-dollar campaigns today, so it doesn't sound like much money. But so that's the industry. It's legislatures know this is an industry that's not very highly liked. And so they don't mind going after them and fighting them. It makes them look good. They're fighting for the little guy. They're fighting for the policyholder. But they're stuck with the language that's in the policy. The bottom line is on storm surge, make sure you get this in your essay. The bottom line is insurance industry has never paid a claim for storm surge ever. It's always won that case. The language they believe is very clear that it's not covered, but Scruggs was on the attack to make the insurance industry liable for that. If that had happened, the insurance industry would have stopped writing homeowners on the coast entirely. They would have just completely stepped out of that business. So if you're an actuary, you're assuming flood's not covered. So you as an actuary have to price hurricane insurance And you in your calculations have to figure out how much is wind damage and how much is flood damage. And it probably depends on this hurricane. Do y'all know the categories on here, hurricanes? Have you ever heard that before? So Cat 3, hurricane. So 5 is category 8. I don't think there is a category 8. I've never heard of category 8. So yeah, 5. Yeah, I don't know what an 8 is, but category 5, that's the biggest one. Why isn't there a category 8? So you could have a Richter scale 11 earthquake, and there's no limit on that. But why can't hurricanes go higher? Well, the interesting thing with a hurricane is hurricanes kill themselves. Because what causes a hurricane is hot water. But if a hurricane's really strong, what does it do? It cools everything down. So it essentially kills itself. So there's a limit to how big a hurricane can get. So category 5 should be the biggest that you can get. I don't know if this shows you, but a hurricane, let's see, we got a good list there somewhere. So I forget what Katrina was. It may have been. I had a student 2 semesters ago named Katrina. No, it was in my EMD, and every time I said her name, I thought Hurricane Katrina. I said, "You were alive and hurt." Yeah, sorry. Yeah, that was a horrible couple of years there. Yeah, category 3. So it wasn't the top of the level, but it's possible category 3 has more flood than a category 5. Because what matters and why New Orleans was so interesting is it has to do with the slope of the coast. And if the coast is really steep versus really flat, you get very different flood. And it also impacts how strong the hurricane is when it hits the land. And so there's a lot going on here. I had a great video on this that was just wonderful. And they took the video down, and I can't show it to you. I really liked this video. It did earthquakes and it did hurricanes, and it was so interesting. But yeah, he was explaining why hurricanes have different impacts. And so this particular hurricane, the wind speed wasn't that massive, but the flooding, because of the way it hit and where it hit, was very, very, very impactful. So let's look at, so Cat 3 wind speeds. So it's all about wind speed. 110 to 120, 111 to 125, 29. 5 is over 157 miles. That's the massive one. I don't know how many Hurricane 5s we've had. There's probably been some that never hit land, so that's always possible. If you notice in the Atlantic, except for poor Bermuda, but they tend to go up the coast and don't turn left. Hurricane Sandy was a big exception to that, where it turned left and went into New York. But it's the temperature of the water, and the water tends to be cooler, and it tends to push it out into the ocean. Our Hurricane 5 hitting Houston or Corpus Christi would be very, very devastating. I don't remember what hurricane, what was it, Harvey? That may have been a 4. It's kind of between a 3 and a 4. So yeah, it was a lot of that was flood as well, but there was some wind damage. So so you still, as an actuary, it's gonna be a pretty big challenge. So when you run your models, it's not just what category is a storm. Did it hit Miami? Did it hit Louisiana? Did it hit Houston? How flat is the land? All of that has to go into their models. If I were an actuary, I'd almost want to get a degree in meteorologist, learn weather patterns and all those kind of things, because this stuff it's very scientific, and you have to know this stuff to be able to price the policy. But the storm surge is not covered, so your only question is how to separate it between those two. The other thing you have to know is where a 3, 4, or 5 is likely to hit, because again, it's the temperature of the water. You have El Nino and La Nina, if y'all heard of those, and that has impacts as well. All of that has to be in your modeling to try to figure out what's going on. There are storm forecasters. And there's one really famous one, but I can't remember his name. You probably see him in here. Oh, what was that guy's name? But every year, USA used to watch it. He would say, we're going to have 2 storms, category 5, 1 storm, 4, 3 threes. I don't know how good his forecast was, or he'd forecast them. He never forecast where they're going to hit. It was just the number of storms. And so you have to kind of guess. It's going to, if it hits Texas, that's bad. If it hits Mexico, that's bad for Mexico, but doesn't hurt, so it could hit Texas, but if it hits Texas right here, who gets hurt here? There's no one there. Bunch of rabbits, right? Bunch of rabbits jumping around and maybe some cows. You got King's Ranch, but if it hits right here, massive difference hits right here. So 10 miles, 20 miles can have a huge, huge, huge impact. So actuaries, that's their expertise. And that's part of what they got to do on homeowners insurance is figuring out those different combinations. You also have the issue with earthquake. You have earthquakes, but you also have fire following. They have to separate those two. How much damage was due to the earthquake and how much was due because earthquake caused gas lines to pop and all this that causes massive. I think the famous San Francisco earthquake of like 1908 or whatever, I think most of the deaths were by fire, not because of the actual earth movement. So actuaries have to break those up because you get different coverages depending on what there is. So, this is important stuff. All right. So the link here, and I've had students on the exam say the same thing happened with storm surge. The courts required companies to pay for this. That's not true. It didn't happen. It almost happened. There was a court case. The legislature, the politicians were going after it. You had Trent Lott, a leading senator, saying, I'm going to make the insurance industry pay for this. Pretty scary times, but thanks for Scrubs being so unscrupulous and getting in trouble. That saved State Farm. And State Farm was pretty crafty in this as well, pitting people against each other, and they finally settled. I think State Farm saw they were in trouble. Now, what would have happened to State Farm if the Risby sisters hadn't been there? Been a very, very different case, right? Scrubs probably would have never gotten involved. So they were pretty critical to as well. I don't know if the Scrubs, the Risby sisters are still around. It'd be pretty cool if I could find them and have them come talk to the class. That'd be pretty cool. They probably wouldn't want to do that, but at least not on video. All right. So are y'all understanding what I'm looking for on storm surge? I want you to see how critical contract language is and how courts interpret contract languages to this business. You don't see that on the life insurance side. It's not like, did he really die or not? No, the person's got a different, they're dead. Here, it's very, very, very different. What you will see on the life insurance side is, did the person receiving the benefits kill the person who died? That can go to court and be challenged, but that's a little bit different. But it's not that big of an issue. It's a huge issue on the property and casualty side. And I don't know if you've ever thought about the case that one event, half of it's insurable, half of it's not. You can see how complicated that makes this whole thing. It really, really is complicated. And then you think about in Texas, all those people who built their houses on stilts, thinking that would protect them. And sure enough, the flood went right under the house. But the problem was another house that wasn't on stilts floated by and knocked them off of their stilts. Now you got to say, okay, is that covered or not? Is that flood? All these things have to be interpreted by the courts. All right. Y'all have enough to start working on your essays? When's the exam? Is it like next Monday or when is it? Probably not. Might be like next semester. I can't remember. So almost a month away, but get it out of the way. You got your paper 1 already done, right? You already drafted it. That's out of the way. So get these essays done now while you're thinking about them and get them out of the way. So your paper's due next week. So definitely after your paper's due, get those essays done. It's open book. You're going to submit it on Canvas. So get it out of the way because you really don't have anything else to work on. I know they're squirrely, difficult essays, which is good. Makes you think. Try to apply what you learn in finance to this in this industry. So yeah, we're getting it.
Come into class then. write it out?
No, you submit it on Canvas right before class starts, and then you come to class to do the 2 math problems. Yeah, the 2 math problems are closed book in class. Yeah, I used to, everything was in class, and then after COVID, yeah, I started doing everything open book, and the grades didn't change. It really shocked me. Grades didn't change. And I have students, y'all had to explain it to me, but I have students that really bomb these questions. In my mind, it's like I've told you everything you need to do, but some students, and I think it's because they start writing on the essay the day before the exam. And it's just not enough time to go back and watch all the videos and see all this stuff. So they're kind of, especially like on the paper, they do the entire paper just from the Berkshire Hathaway article, and that's not enough. We talked a lot of other stuff in class, so that's why it's best to hit it right when you're thinking about it, so you don't have to go back and rewatch all of those classes. So, all right, so we probably won't go back to this, other than we'll probably next class talk about the video. Y'all remind me on Monday that I'm letting you out early. You probably won't forget to tell me that. All right, so let's do some math, because you want to do math, right? You've got a bunch of actuary majors, finance majors in here. Y'all want to do math. So let's go back to the class notes, and we'll set up the math, and then we'll do the math. You're going to find the math here is not too difficult. All right, so I do have a little bit of outline of the articles in the notes that you can look at if you want to. That might help you with your essay, but I've already covered all of that. So let's talk about catastrophe risk. These are low frequency, but very high severity. I mean, really low frequency and high severity. I'm a big fan of NOAA site. I don't know how many of y'all have used NOAA. I've used it for some presentation. I did a presentation for a bunch of property casualty actuaries, which is always nerve-wracking to me, because I know actuaries are smarter than I am. And so when I present to them, I kid you not, I presented once on, I forgot what the topic was. And there's like 500 actuaries in the room. And at the end of the presentation, this actuary asked a question. I had no idea what he's asking. It was so over my head. And so I said, sorry, I'm not an actuary. That's over my head. And he, in front of 500 people, you want to guess what he said? He said, I will dumb it down for you. And there were noticeable gasps in the rest of the room. All my actuary friends from USA, they're like, sorry, he's kind of a weird dude. And I was like, no, he had to dumb it down for me. He's smarter than I am. That doesn't bother me. But yeah, I thought that was, obviously it must bother me some, because I remembered it. But yeah, it was, but talking to actuaries, they're much more quantitative than I am. And I was talking on a quantitative topic, so I knew I was in trouble. But here's the NOAA site. So you have a lot of data here that you can really use that give you can go back to the year. Pacific, we don't have many hurricanes. There was a strange one last year, before, where it looked like a hurricane was going to hit in the California area. That's incredibly rare. And I think that one was just a flood issue. I don't think there was really wind damage. So it's really the Atlantic, hurricane, and Katrina, I think, was 07. So you can see, is Katrina in there? I don't see her. What year was Katrina? But
That was
5. Yeah, I might have done the wrong year. Oh my word, yeah. It wasn't just Katrina, but there were some other really big ones. Arlene was a huge one. Yeah. And then they give you this. I love this thing. Y'all may have seen this sometimes on the news, maybe not all of them, but one of them. So they'll tell you when there's a hurricane forming out in the Pacific or in, are y'all familiar with Sargasso Sea? Have you ever heard of that? I'd never heard of it in my life, but it's like right here. I don't know why it's right in the middle of the Atlantic. I was learning all the countries in the world and all the oceans and seas, and I go, what in the world is that? It's like I live right next to it, never heard of it. But anyway, I'm going to say this is all the Atlantic. I know that's the Gulf, the Caribbean, and supposedly there's something right there. But as it comes over, it's going to gain strength depending on the heat of the water that it hits. But how predictable is it? It doesn't go in a straight line. See how a lot of them turn right and go up the coast? Very few of them actually go left and hit into it. If I could find Sandy, you could see an exception there. The interesting thing for Katrina, if I can find Katrina, which one is Katrina? My word, this is hard to read. Katrina is number 11. Do y'all see number 11?
Left and right of Florida.
Oh, right here? Like, I don't know which one that is.
Yeah, it's like a bunch of-
It's hard to see, but Katrina was interesting because it hit land twice. So it hit Florida, caused some damage, went back in the Gulf, re-strengthened, and then hit Louisiana. I guess I can just look at Louisiana and see what hit there. And it does have strength going up, but this is all going to be flooding. The wind is all going to hit right on the coast because once it hits the land kills the hurricane. All the rain clouds keep going, but the wind, I mean, it'd be windy, but it's not going to be hurricane force. Let's see if I can find Sandy. I don't remember what year Sandy was. Y'all remember Sandy? 2012. Y'all were what, like 8 years old then or something? At least I don't ask if you remember Jimmy Carter. I finally learned not to do that anymore. Okay, do y'all see Sandy here? Where is Sandy? That's not Sandy. Maybe this is Sandy. So Sandy is 18. There's an 18 there. It's really hard to track them. That doesn't look, I guess that is it, but it doesn't look like it's as strong when it went in. That probably is Sandy. Sandy was pretty unusual, but I know at USAA, when they run their million storms, one of their worst case evers was going up through the Chesapeake Bay and hitting in that area. You saw there a lot of flooding, right? Because subways, there's so much stuff underground, so it caused a lot of flooding. That was a pretty serious one. Another really serious one for USAA was the Houston Bay. Stuff hitting in this area, Galveston and Houston, just really, really massive. In fact, one of the biggest hurricanes we've ever had went through the Galveston area. So this is a really cool site. I really like it. It's not so great right now because we're not in hurricane season. So, but next August, September, October, November, if you see a hurricane get on NOAA's site and start looking at them, they have a lot of really interesting things. You can actually drill into each one of these storms and do more analysis if you want. So if you want to look at Sandy, they have a whole paper. It's not exciting reading, and the paragraphs are way too long for my liking, but you know, it's just a lot of stuff, right? How many pages is it? 157 pages. Probably more than you want to know about Sandy. There's a lot of tables too. So it's a great site. It's all free because we're paying for it as taxpayers. So interesting. The NOAA site itself has more than just hurricanes. So if you just go to NOAA.gov, all kinds of weather-related information. I think it's all U.S. based though. I don't think they cover the world. There probably are places you could go to see other places. Obviously, there's no activity in our Gulf right now. But the cool thing is when you have a storm, y'all probably seen the cone. You know, remember seeing that where it shows this is the place it could hit. This is what the speed could be. They'll show that here. So really cool stuff. And then, you know, does it hit Texas? Does it hit Mexico? Where does it hit in Mexico? I work a lot in Costa Rica. Costa Rica had a major hurricane hit a few years ago, and they just got completely flooded out. So yeah, interesting stuff. Pacific, I think, is kind of boring. So the worst storm USA ever had in its million scenarios was a hurricane hitting Hawaii, which I don't think happens very often, but they essentially said the state of Hawaii disappears. It completely goes off the map. It was a massive, massive storm. They were shocked when they saw it. Now, they kept rerunning the model and that storm never came back again. So there was somehow the model destroyed the state of Hawaii, but they never saw that storm again. It was the worst out of millions and millions and millions. But it freaks them out a little bit, thinking, wow, we never thought about that. We're not really worried about Hawaii. And then suddenly they have that come up on the radar. Now, some cat history. I try to find some recent ones. Oh, actuaries, this group right here. I would, before you interview, I would go on their site and start reading up. It's a great, great, great site. We're probably going to use some of their stuff. So it's iii.org. Let me do their main site. Well, how many times will I get on the internet and we don't see Trump or Biden's face this year? It's probably every single time, right? So here it is, Insurance Information Institute. Isn't that a wonderful name? Now, this is property and casualty side. It's not life insurance. All kinds of free stuff. You can get into cyber liability risk. I might find something on here to write for our second papers. I'd forgotten about this site. Really good stuff. They had someone from this group come in and speak to the Texas Insurance Council. I was just amazed at the data that the guy had. It was really, really, really interesting. So, so here it is. Here's what they have on catastrophes. So here's insured losses for natural disaster catastrophes total 130 billion, 76% above the 21st century average, 18% higher than 2020. I don't know what year I'm doing here. Hurricane Ida, do you remember her? All right, so here's a interesting question. Hurricanes can have women names or men names. What causes more damage? A hurricane with a woman's name or a hurricane with a man's name? Are the same. What would you think? What do you think?
I think it's one.
The women name would have more? Why would you think a hurricane named?
I think I've heard that before.
Oh, yeah. Oh, okay. So you have some
It
insight.
seems historically that
Yeah.
usually the most catastrophic are the ones.
But why? Why is it? Okay, they think it's because when a hurricane has a woman's name, people are less likely to evacuate.
Oh.
And so if you want people to evacuate, give it a mean sounding man's name, and they're more likely to flee. I don't know if that's true, but that's what they're supposing. It should be a difference, right? Because they just randomly make up these names. But anyway, so Hurricane Ida was the largest insured loss in 2021, the fourth costliest hurricane on record, $36 billion loss. There were $20 billion insured loss events, the fourth highest on record. So 2021 was a pretty bad year. Insured losses of 17 billion from winter weather. Oh, was that our bad winter? That was our bad winter storm, wasn't it? I remember that because I had to ride my bike every day and it was like 17 degrees. Costliest on record. Yeah, Texas was terrible. Can you imagine the burst pipes and everything else in Texas? There was probably some pretty bad events. 13 billion insured losses from European floods on record for that continent. Wow, that's interesting. Aon noted roughly 38% of global economic losses are covered by insurance. So they don't cover much. A lot of it's not insured. Natural catastrophes 2021 resulted in total global economic loss of 270 billion, according to Swiss Re. Of those, 101 billion were insured. So less than half is actually insured. I haven't tried Aon site. I maybe just try. I love Swiss Re site, but I haven't tried Aon. So according to Swiss Re, Sigma report, I spray click on that. Man-made disasters. So what are we talking about there? There you're talking about terrorism events. A total of 10 billion, which is 8 billion were short. I don't know what those were. I can't remember 2021. Marsh, I never looked at Marsh, but Marsh does provide a lot of insurance information. 100 largest and hydrocarbon industry, which summarizes largest property damage losses. So here's the perils of that year. 56 billion were cyclones, 38 billion. Winter weather was 5, earthquake 3. I don't remember earthquakes. This is probably global though, right? World. So China has had some pretty significant earthquakes, taking out entire schools. Their problem is it took out schools because the schools were not built very well, so that caused them some political problems. But yeah, it's in there. Here's the 10 costliest world natural disasters by insured losses. Katrina is number 1, 99 billion. Ian, which was in 2022, 53 billion. Where's Harvey? Is Harvey in there? There's Harvey. There's Sandy. There's Ida 2021. Look at that, 2021, 2022. We had two pretty bad years. There's Tokyo, 47 billion. Northridge. Remember we talked about Northridge? A lot of that was because they had to tear the buildings down and rebuild them. Now, Hurricane Andrew is really, really important because going into Hurricane Andrew, we had not had a really major event forever and ever and ever. So the insurance industry, I remember at USAA, our worst case scenario was much smaller than Andrew. When we said our 1 in 500 year event was much smaller than Andrew. And so when Andrew hit, the actuaries were like, wow, this must have been a 1 in 200, 1 in 300 year event. And when they reran the numbers and assessed it, they discovered Andrew was only like a 1 in 40 year event. And so suddenly overnight, all these models got recalibrated. And our worst case scenarios went from a few $100 million to a few $1 billion. Hurricane Andrew was massive for this industry. Insurance rates started going up dramatically. So I remember Hurricane Andrew, it was a shocker to our actuaries. They just did not see that one coming at all. And you can see it was a big event, but it wasn't. Now, I don't know if they put these. Yeah, I guess these are in 2022 dollars. So this may be inflated for USA for inflation. But those are the events. Now they say world disasters, but insured losses. So why is the US dominating this? Probably because things like Indonesia, which was much larger than any of these, very little of that was insured. So there's three ways you can look at this, and this is important on a cat. So you saw the total dollar loss. That's one way to look at it. What's another way to look at it? Total insured loss. What's the third way you can look at it? What did Indonesia have? Total lives lost. So you'll see it. So you can't say that's the worst catastrophe. You have to ask, well, what? In total dollars, insured dollars, or lives lost? I think Indonesia probably is the worst. Now, I think Galveston in the United States is still the worst for lives lost. I think, and you can probably just Google it. Most lives lost U.S. catastrophe. I think that is still losses net causing 65 billion lives lost. So I still think it's Galveston. 8,000 people died, but that was a long time ago, but I don't remember what year it was, but a long time ago. So 8,000 may be the record in the United States, but you compare that Indonesia. I think it was tsunami, but let's say hurricane because I can't spell tsunami. So how many people died? Do y'all see it? 2018. I don't know if it shows anywhere, but I think that's the world record, and it was a really sad event, but I don't see the numbers. I think it was over 100,000, wasn't it? I don't.
227,000.
227,000, and I think they may still be counting. There's so many missing people. Really tragic. The property loss was really small, but the lives lost. So you can have really small total losses and huge lives lost if you hit a third world country where there's not good infrastructure. So interesting. Now, what was the last one we saw in Turkey? Y'all remember that one? It was an earthquake, right? You thought Erdogan was going to lose the election and end up winning with no problem. I don't know how many people died there, but that was 7.8, massive. And several people died there, and a lot of people were displaced, and Erdogan ended up. And why was Erdogan in trouble? Because he did some things that probably made it a lot worse. He cut back in areas that he probably shouldn't have. I won't say what my view of Etowah is, but anyway. All right, here's another one. I gave you a few here. I think looking at catastrophe history is interesting as from an actuarial standpoint, just understanding what we've seen historically versus what we could see going forward. So there's the Galveston store, 1900. A storm threat through Galveston. Galveston was Texas' largest port cities, but a hurricane with 140, so that looks like a category 4, swept it off the map. It's estimated 3,600 houses, 600 businesses were reduced to rubble. This is the earthquake 2008. A deadly 7.9, that's massive. In China, it caused multiple landslides, killed almost 70,000 people. I don't know how to say Sichuan. Australian wildfires, I didn't know about them. Hurricane Maria, where did that hit? Yeah, Puerto Rico had 2 hurricanes, Hurricane Maria and Hurricane Donald Trump. Because when Maria went through, it caused all this damage. And then Trump visited Puerto Rico and he said the worst possible things he could have said, and it caused Puerto Ricans' debt to just nosedive. It was, I don't know why he went. Sometimes presidents should just read the teleprompter and not say anything else when it's this sensitive. I don't think he was thinking that, oh, if I say that, this is going to cause them more disaster. But it was, I mean, he was trying to be good. He was trying to say the right things, but he just, you got to realize when you're president, they parse every single word you say. Yeah. And he's not the kind of president who worries about parsing words. So yeah, it was not a good thing to do. That was when he threw a roll of towels out into the audience. I don't know if you remember that. Here's a volcano disruption. I don't know where that is. Another, volcanoes are huge. I've been in Costa Rica when they had a volcano go off. It just put ash everywhere. They had to cancel flights for 2 or 3 days because you couldn't see to fly a plane. Kashmir earthquake, 2005. Haiti earthquake, you remember that one? That one had a lot of loss of life as well. That was very devastating. I don't know that one. I don't even know where that is. Cyclone. China floods. Indian Ocean earthquake and tsunamis. Tsunamis, follow the earthquake. There's the 2023. They say Syria too. I don't know. Syria, we don't really know what's going on in Syria, so no telling how much. So a lot of earthquakes, right? A lot of floods, hurricanes. So, yeah, I mean, those are the biggest ones, but biggest in what? So when you read an article like this, what you want to ask is, how are they defining this? So here it looks like death and destruction. Is it in dollars or is it in people? This looks like it's in people. But what I'm not seeing here is Indonesia. So that's why I'm not so sure. Did y'all see Indonesia here? That's in 1815, so that's not the one I'm thinking of. Was this it? Ah, that's it. Okay. So this one here. So Indian Ocean, yeah, I guess, yeah, they're right on the Indian Ocean. So yeah. All right. So a lot of good history, interesting history, sad history, obviously. Statista actually has some stuff on catastrophes. If y'all use Statista. So that's pretty cool right there. But again, most costly. So does that sound like insured losses or total losses?
Insured.
Well, it's probably total. I would guess probably total, but
Okay.
Well, no, you're right, Camille, because it says to the insurance industry, and this is worldwide. So Katrina, Ian, Toyuki of Japan, Irma, Ida, Sandy, Harvey, Maria, Andrew, similar again, Northridge. You can see what they are, $100 billion. Now, what do you notice is missing from here that you're writing a paper about? 9/11. Where is 9/11 in any of this? I think it's because they're calling it non-man-made catastrophes, right? If you include man-made catastrophes, I think 9/11 goes up there. I don't know where 9/11 ranks, but I think it ranks pretty high. Could even be number 1. Who knows? It's pretty big. I mean, just replacing the trade towers, the twin trade towers themselves would have been, pretty expensive. by itself. So, so you can see when you say worst catastrophes, you gotta define it. Are we including insured, non-insured, lives, including man-made disasters? Be real careful on your definition. So I'm going to introduce a new term to you. Probable maximum loss. Now there's two terms. I understand one. I don't remember the other one. So there's probable maximum loss and there's maximum probable loss. I don't remember what the second one is.
Just words change, is they're not the same thing?
They're not the same thing, no. So I can't remember the difference in them, but you actuaries, you can look that up on your own. At USA, we use probable maximum loss, PML. So everybody out at USA knew what a PML was. In my risk management class, we call it value at risk. So if you understand value at risk, it's essentially the same thing with one key distinction. So value at risk, so Alec, you know value at risk. Who else is in my, and Lauren, you're reading value at risk, right? It's some probability like 5% of how much you could lose on one day. That's not PML. PML is not 5%. It's like 0.2%. And it's not on a given day, it's on a given year. But the concept's the same. So it's your expected loss at some probability. And when I do PML, I always like to put the probability into the PML. Same thing at value at risk. When I use value at risk and PML, I like to put the probability there. So like Goldman Sachs uses a 5% risk tolerance. So I would do their VAR at 5% equals 50 million, which means 5% of the time they expect on any day to lose $50 million or more. 95% of the time they expect to lose less than 50 million. All right. So what do you say on their PML? 0.2% of the time in a year, they expect to lose $500 million or more. 99.8% of the time, they expect to lose less than $500 million. All right. Now, don't think the normal distribution, because P&C insurance is not a normal distribution. The tail is a little bit lumpy. It's more of a stochastic simulation kind of thing. But if you run 1 million simulations, and we're going to show you how to calculate PML. It's one of your math questions. It's pretty straightforward. You just line them up, best to worst, and you go find that 0.2%, and that's your PML. It's that simple. So the insurance company, really important words right here. Don't leave those words out. How often do they expect to lose $500 million? Essentially never. So it's $500 million or more. Okay. As I tell my risk class, I worry much more about the or more than anything else. In fact, I love the actuaries at USA because they said, you know what? I want to run the distribution of the or more. I want to see the distribution of the tail. Isn't that pretty cool? I was like, wow, that's so cool. It's like, yeah, we're going to run our scenarios 1 million times, and then we're going to just take that 1% in the tail, and we're going to run that 1 million times. We're going to get the distribution of the tail and run it 1 million times. Like, that's the coolest thing I've ever heard. I don't know how to do that, but let me know when you do it because it's really interesting. So how is it calculated? You run a stochastic cat model. So how do you do that? Let me show you a couple of these people. Really impressive firms. I hope one of y'all actuaries work for one of these firms because I'd love to have an inside contact. So they got bought out by Moody's. Okay, so wow, here's an interesting article. How the Northridge earthquake reshaped the California insurance market. Oh, I want to read that right now. Oh my word, that's really interesting. I didn't know that was out there. So great articles out there, but RMS, they're famous for they started off as running earthquake models. That was their thing, earthquake models. They do everything now. They have all the different, you look at solutions by industry, by function, catastrophe model, earnings risk. They have a hurricane up there on top, but they're mainly known for earthquakes. And they'll show you the different things that they model. And I think they're even going on the life insurance side now as well. Just a lot of really, really cool stuff there. The other firm, you can guess what they started out as, because they're called AIR. What do you think their first storms were? So they start off on the hurricane side, but they do earthquakes and everything else. I call it cat modeling. That's what USAA called it as well. I made a mistake at a conference calling it cat modeling. The guy had no idea what I was talking about. So I think I told you all this story. The first time I met Dr. Ibbotson, I said, you know, cat modeling. He's like, what are you talking about? I said, make a fool of myself. Catastrophe modeling. So that's what they do. You can look at the type of risk that they cover. They have some good stuff on here. They have white papers you can download and read. Just a lot of really, really cool stuff. Their solutions, services, what they, you know, there's, well, risk, this is even better. Agriculture, farm insurance, a drought. How do you measure a drought? Are we getting more droughts today? You know, with global warming, some areas are getting more rain than normal, some areas are getting more droughts. Casualty, there's hurricanes, earthquakes, climate change, flood. They even have life insurance sites, various thunderstorms, terrorism. They even have a section on terrorism. That would be interesting to see what they're learning on there and insights. So it's just cool stuff. I've never heard of Verisk, but it's Air has probably got bought out by them. So who are these people? Open positions. Could y'all apply for a job here? Do you think they hire actuaries? Absolutely. Do they hire finance majors? Probably in their finance department. But what jobs do they have? It would be search open positions. They probably hire meteorologists. They probably hire engineers, climate scientists, software engineer, because I do a lot of modeling, obviously another geotechnical, I don't know what that is. I'm not seeing actuaries coming up here. Economist, risk consultant. All right. Have a good weekend.